The Supreme Court has reluctantly given 2 more weeks to the centre, RBI and banks to decide on interest waiver for borrowers and extension of the loan moratorium period. The top court will now hear petitions seeking waiver of interest on loans during moratorium in the last week of September, while its interim order will continue where banks were restrained from declaring any more accounts as NPAs. The top court will continue its hearing in the last week of September, while government, RBI and banks have been asked to decide on sector-specific loan relief and whether the levied interest can be waived off or not. Also, government and RBI have been asked to come up with a concrete plan, since the court has made it amply clear that it is not going to defer the hearing any further. The court observed that all borrowers cannot be called adversarial since they are seeking relief from payment of AMIs or interest. Centre had sought a time of 2 weeks, stating that the relief package was being considered at the highest level. It was urged from the side of the union government that the court should only consider the limited question of interest waiver and not rely on news reports. SBI had told the top court that many fraud accounts were also benefiting from the restraint which was imposed by the top court order as far as declaration of NPAs is concerned. The last week, the top court had asked all banks as well as the government to ensure that no more accounts are declared as NPAs till further orders. The court had observed that the degree and method of relief to borrowers needs to be structured by the centre and can not only be left to banks. The court will now analyse whether centre can help borrowers under the Disaster Management Act. The court had observed that customised and sector-wise relief needs to be looked at to help various industries tied over the COVID pandemic. While the Apex Court held that they are not an expert body to change decisions taken by financial bodies, RBI was asked to clarify if it was the discretion of banks to give any relief to borrowers. Centre and RBI had also dismissed fears of mass NPAs in case loan moratorium is not extended beyond the 1st of September, since they had submitted that an account needs to have a minimum of 90 days of default to be declared as an NPA. Both Centre and RBI have opposed any loan interest waiver, stating before the court that strong banks are needed to revive the economy and reconstruct stressed assets. Solicitor General Tushar Mehta had stated that a knee-jerk reaction to write-off loan interest during a financial crisis will only end up weakening banks. The Solicitor General had pointed out that the COVID pandemic had a varied impact on various sectors of the economy, stating that a one-size-fits-all approach cannot be adopted. For instance, pharmaceutical and FMCG industries had gained, but sectors like real estate, hospitality and tourism had suffered the most. The Solicitor General had also refuted allegations made by petitioners who claimed that the government was hiding behind RBI and was behaving like a mouthpiece of commercial banks. The case before the top court had begun after a petition was filed by an Agra-based lawyer, Gajendra Sharma. Now a batch of petitions have been filed by various industry groups and individual borrowers seeking interest waiver on loans during moratorium.